As I mentioned earlier when we were doing off the charts, one of the hardest hit stocks today is also one of the best investments every year, McDonald's. Why was it down 2.6%? Because J.P. Morgan put out a piece of research arguing that McDonald's third quarter results will come in weaker than expected. Now, despite a very strong labor market and very little expansion in the industry, these are two good things for McDonald's. J.P. Morgan is confident the estimates are too high. According to the tracking service they use, things have deteriorated year over year. McDonald's is losing market share to independent competitors. It gets worse. While delivery could be a major opportunity for the Golden Arches, J.P. Morgan's research says that it might be a little more complicated than that. McDonald's partnered with Uber Eats to do delivery. Uber Eats used that money to build out their platform. And now they've added thousands of other restaurants that compete very effectively against McDonald's. In other words, they may have sowed the seeds of their own destruction. At the very least, in an environment where everybody delivers, it's much less of an edge. I got to tell you, I think this is really a tough kind of call. Even J.P. Morgan acknowledges that. Despite all these negatives, they still rate McDonald's a buy. Holy cow! But I get it. I think McDonald's is a buy, too, as did Bob Lang earlier in the show. There's just one problem. Do you know that almost every single firm that follows this stock has a buy on it? And when I see that, that's an accident waiting to happen. If any of these other analysts do their own checks and they get similar results, they're likely to downgrade. Given the stock's up 17% for the year, a downgrade could cause a major sell-off from these levels. Don't get me wrong, I expect most of the analysts will defend McDonald's tomorrow, especially after the hammering it took today. But man, if you've been a bull in this stock ever since Steve Easterbrook took over as CEO and turned things around, it's got to be tempting to declare victory, dump the stock, ring the register, and say, so what do? Even though the stock may be precarious here, what I'm more worried about is what happens if you sell it and then try to get back in at a lower level once the shakeout's over. Kind of a hedge fund thing. Most people aren't that nimble, especially if you have a full-time job where you can't play with your stock portfolio all day. It's a real learning lesson. Can you get out? Get back in. Plus, we can't even be sure that J.P. Morgan's bearish channel checks are correct. I couldn't even tell you how many times I've seen these kinds of projections go totally off the rails. Happens all the time. In the end, I like to zig when others zag. This morning, the calendar changed. That's right, we're now in October. And that's when you reach October, money managers start piling into the year's biggest winners. They want to show investors they were smart. When they reveal their holdings, you'll know, wow, look what they owned. Right now, there's no bigger winner in the S&P 500 than Chipotle. It's up 92% for the year. I think a lot of the weakness that we hear about McDonald's may have to do with a lack of promotions that are compelling. Chipotle's the opposite. It's got a terrific one-timer, carne asada, a tender hand-cut steak. I have already had 2 of them. And most importantly, it has teamed up with DoorDash to expand its delivery capabilities in a new system. Look, in New York, just even a couple of months ago, you could not get Chipotle delivered. Now, there's parts of the city covered. I think they're taking share from everyone, although I respect what Yum Brands has been doing here. I mentioned earlier the delivery business is a cutthroat business. Don't own the delivery companies, own Chipotle. So if you want to buy a restaurant right now, you want to buy a stock, I go over McDonald's with Chipotle. But if you're a long-term holder of McDonald's, I'm telling you to ride out the weakness, because even if something's wrong, I'm confident Steve Easterbrook will fix it. Yes, he's that good. And that, not the chart, is what matters. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.